Hello everyone, I'm Sidhant. As I already have started these for the JAIIB certification exam, and this series will contain two parts. The part A will consist of the lectures, the simple understanding of the topics whatever is there in the for the JAIIB section. As I have started with the legal part, it will contain chapter wise lectures as well as the question and answer session. So the of mine, the focus will be on the basic understanding of the topic, which is very much regarding what you can do to achieve a better marks in the JAIIB certification examination. I think lots of materials as well as the question and answer you will find everywhere, but the chapter wise topics related understanding is not, I didn't find anywhere. So I have taken this initiative to let others know the topics, the simple understanding or basic understanding of the topic of the JAIIB certification exam. Lecture of the chapter 3, the regulation of the banking businesses. In the first topic in this is introduction. As the topic name itself speaks that the regulation of the banking business. So who will regulate? Simply the answer is simple, that Reserve Bank of India. Though there are also some influence of the central government, but not directly. The central government frames the rules, but the RBI frames the regulation which the bank have to follow. And the second topic in this chapter is the power to issue direction. The RBI can issue direction, and these are mentioned in the section 21 of the Banking Regulation Act and section 35A of the Banking Regulation Act. These two sections is very important as far as the regulation or issue of direction is concerned. So under section 21 it deals with the advance and the loans part, and the section 35A is related to the inspection. Through inspection the RBI regulates the banking businesses in India. And what is the nature of direction that RBI gives? It's a statutory direction of to make anyone answerable by if they do not follow the direction. And that whatever the direction the Reserve Bank of India gives, it's a binding to all banks in India. And the direction which is being given by the Reserve Bank of India must be a bona fide. It's not a mala fide. The difference between the bona fide and the mala fide is that bona fide doing with a very good intention, and mala fide doing with a very bad intention. Despite of having the directions, the RBI can also issue a caution and the advice to the particular bank if it's needed. The next topic is the acceptance of deposit. So here it is, the acceptance of deposit. In this, first, as we know that what is the role of banking? The role of the banking is to accept the deposit and give that deposit into a loan. So acceptance of deposit is a very important part of the banking businesses. And here you must know what kind of deposits can be done in the bank. The deposits like time deposit and the demand deposit are very common, and in time and demand there is lots of other section. Like in time deposit you have RD, recurring deposit, fixed deposit, and in deposit you have saving bank accounts and all. And regulation, what about the regulation of this acceptance of the deposit? See, RBI cannot directly regulate this part of the banking, but they must have some regulation. So they do not say that this bank has to give this much percent of interest if someone opens the FD or RD or saving bank account, but they have specified that maximum this much can be given and minimum this much can be given. So the maximum and minimum is specified by the bank, by the Reserve Bank of India, and other than that the decisions are taken by the bank itself. And like the interest rate of NRIs are decided by the Reserve Bank of India, and how much period maximum that FD can be opened, that is 10 years that FD can be opened. These things are regulated by the Reserve Bank of India, or specified by the Reserve Bank of India. And the return on the unclaimed deposit, what if someone hasn't taken their deposit, and if it's 10 years old, then this amount must be transferred to the Reserve Bank of India under DEF scheme, like Deposit Education Awareness Fund. The RBI deposit this fund in the DEF account, and with this the RBI is use this amount for awareness of the people about this banking deposits and all. And one question is very important here, that under section 26 the annual return of this unclaimed deposit account have to be given by the bank to the Reserve Bank of India, and after 1 year, at the end of 1 year, the 30 days period of time is given to the bank to deposit this annual return. The next topic is nomination. Here only some points are important, like under section 45ZA of Banking Regulation Act specify the nomination of the banking accounts, the amount in the bank accounts, the 45ZA, and the rule 2 of the banking companies, and it mentioned under rule 2 of the banking companies nomination rules and Cooperative Banks Act. So this is the act which is specified the nomination part of the banking regulation. And there is also one section like 45ZC and 45ZE relates with the safe custody and the safe locker, the nomination of the safe custody and the safe locker. The rule 3 and 4 specifies this under Banking Nomination Rules Act and Cooperative Act. The banking companies are for the banking companies, and cooperative nomination rules are for cooperative banks. So the next topic is loans and advances. The loans and advances is regulated by the Reserve Bank of India under section 21, and the direction are not very specific, but the direction like to whom to whom it should be given and to whom it should not be given, like the category demarcations and categorizations is done by the Reserve Bank of India. The margin is done by the Reserve Bank of India. The maximum amount in particular loan, the maximum time the particular loan can be given, the guarantee, the rate of interest in some of the like DRI, differential rate of interest, are decided by the Reserve Bank of India. These things are directed or regulated by the Reserve Bank of India. There is one term in this topic is selective credit control. It's not very active now, but previously, in order to increase or decrease the prices, the selective credit control method is being used. Like in selective control method, if the rate is decreased, the amount of loans taken is increased, and hence the growth of that particular sector will be increased. This is selective credit control. The section 20 of this loans and advances relates to the loans for the shares to the directors and for the substantial interest. Section 22 restricts the bank to give loan to the to the directors of the company for his interest. It's mentioned in the section 20. Next topic is regulation of interest rate. It's mentioned in the under section 21. The regulation of interest rate is being done. Previously, interest rates are decided by the Reserve Bank of India, but now the interest deregulated after the Harjit Singh versus Union of India case. It's a very important case. It could be asked, so you must take note of it. And and for some sections still is with the RBI to decide the rate of interest, like the differential rate of interest, the loans against the deposit of the depositor, the export section, weaker sections, loans, etc. decided by the Reserve Bank of India. And you must know the difference, what is the base rate, what is the BPLR, what is the MCLR. Though it will not directly ask the definition of the base rate or the benchmark prime lending rate or MCLR, marginal cost of fund lending rate, but the questions could be asked that when the base rate replaced the BPLR. It replaced on July 1st 2010. The BPLR was removed and base rate was accepted. And the question could be asked that who can review the base rate. The base rate are reviewed by the Asset Liability Management Committee, that is ALCOS. And there is one term, that Usurious Loans Act 1918. These must that Usurious Loan Act 1918 used for what purpose? It was used for the exorbitant rate of to protect the weaker section of the society from the money lenders. To stop the exorbitant rate demanded by the money lenders, the Usurious Loans Act of 1918 was used, and the protection to the interest rates. There is one line that if the interest rate, if someone challenged it in the court, then it will not be entertained. That the interest rate of the bank, what bank is demanding from the borrowers, no one can challenge this in the court. The next topic is regulation of payment system. As after the introduction of the Information Technology Act of 2000, it's mentioned in the section 58 that payment of the digital payment is valid under the Information Technology Act. So to synchronize, the Reserve Bank of India introduced the PSS Act, that is Payment and Settlement System Act 2007. And it is regulated by BPSS. The full form of the BPSS is Board for Regulation and Supervision of Payment and Settlement System. And when this PSS Act is effective, it effected on 13 August 2008. So the next topic is regulation of the money market instrument. You know that what is money market? The money market is a short-term taking of the money from the investors or the public. The money market instrument is used by the Reserve Bank of India to raise the amount which is required to fund the central government. And it's the money market instrument. The beauty of the money market instrument is that it is for less than 1 year. And it's mentioned in the section 45W of Banking Regulation Act. The regulation of money market is done by the Reserve Bank of India. The next topic is the Banking Ombudsman. The Banking Ombudsman scheme was introduced in 1995 by Reserve Bank of India. It's nothing but a public grievance redressal system. It excludes the regional rural bank. And what are the grounds of complaint that public can put into this Banking Ombudsman is it covers almost every thick and thin of the banking system. That any complaint regarding anything, you can call to Banking Ombudsman and put and register your complaint. And what are the conditions before you put a complaint to the Banking Ombudsman? The conditions are: it should be written in complaint, and it must not exceed the 1 year of time after you have received the bad services, or not complained to any ombudsman previously. The same complaint cannot be entertained another time. If it's got rejected due to some reasons, then it's not in any court of India, then it's not frivolous, it's not malified, and it's under the period of limitation. There you have one chapter called Limitation Act. I will discuss in that, but you just get that it should be under the period of limitation. So the next topic is reserve funds. As we already have discussed in the previous chapter what reserve funds is all about, and in the reserve fund, the creation of reserve fund is mentioned in the section 17.1 for the domestic banks, and for the foreign banks the section 11.2. What is required in the reserve fund? The reserve fund are the funds, the 20% of the profit of every year profit should be deposited with the Reserve Bank of India, bank of the particular bank. And what are the exemptions? If the paid up capital and the other reserves are adequate in relation to the deposit liability, then this 20% criteria can be. The next topic is maintenance of the cash reserves. As we know that the bank has to maintain the CRR and SLR. In this topic we will discuss the CRR, and the next topic we will discuss the SLR. The CRR full form is cash reserves ratio, and it's mentioned in the section 42. It's very important, it will be asked in the examination. The section 42 deals with the cash reserves ratio, and section 42 CRR relates to the scheduled bank, and section 18 for the non-scheduled bank. And the quantum of CRR changes according to the bi-monthly monetary policy. As we know that in every 2 months the monetary policy committee decides what CRR is at the particular month. The calculation, how can the calculation can be done? It's on the average daily basis. The average daily basis is one of the method or provisions to calculate for the CRR, the calculation done for the CRR, and return how the bank will return to the Reserve Bank of India. They will make a return in the demand and time liabilities form. They have to give the report to the Reserve Bank of India, and the return should not exceed the 7 days of the date at which it relates. So each alternate Friday you can take 15 days. In 15 days they have to send the report to the Reserve Bank of India regarding the maintenance of the CRR and penalties. If any shortages in the return, if there is any shortages, the penalties will be applied, and the penalties, if it's for the first time, then it is bank rate plus the 3%, and if it continues then it's a bank rate plus 5%. And for the non-scheduled banks, it is 3% for the net demand and time liabilities. They give this penalty not directly to the Reserve Bank of India, but they have to keep this with themselves, and later they will adjust what kind of amount they have to give or take from the Reserve Bank of India. One thing I will clear you, that in CRR each alternate Friday they have to send the report. Let's say today is Friday, and for the previous 2 Fridays the bank has to give the report to the Reserve Bank of India. So they have the time of 7 days from today, so that they can send a report to the Reserve Bank of India. And the next topic is the maintenance of liquid assets, that is the maintenance of the SLR. It's mentioned under section 24 of the Banking Regulation Act, and the return of this is monthly. There the return was on the second alternate Friday, and here the return is monthly, and the penalty is same as we have mentioned in the CRR. That is, if the penalty is for the first time, then the penalty would be the amount plus the bank rate plus 3%, and if it continues for the consecutive time, then it's bank rate plus 5%. And the next topic is, that is assets. Banking company has to maintain some assets under section 25. It's mentioned in the section 25 that bank has to maintain some assets, and return, and after how much time they have to give the report that what kind and what amount of assets they have. Quarterly they have to give this report to the Reserve Bank of India quarterly. How under what time they have to send this report, so that they will not be penalized. It's after 1 month. Before 1 month they have to send this report. The filing of the report is quarterly, and they have another 1 month time to send this report and let know the RBI about the assets they had. These conditions of the 5% of the net demand and time liabilities, this much amount of assets they have to maintain. And you must know that what is net demand and time liabilities. The total amount of deposits, the let's say the saving bank account, the time deposit, fixed deposit, the recurring deposit, all those deposit consist of the NDTL. It will also subtract some of the things like the deposits, the Reserve Bank of India and all, but don't dwell into it. It will be required in the CAIIB exam. Just understand NDTL, and the 5% of the NDTL they have to maintain the assets, and they have to file this return to the Reserve Bank of India quarterly, and within 1 month they have to send this report to the Reserve Bank of India. That's all. Thank you. Have a nice day.